gosh. Welcome back to Money Mondays, everybody.
Welcome back, everybody. It's 3:30-ish Central. We're a few minutes
we
late.
did it,
Apologize.
you did it.
Ben needed to get some makeup on before we went live.
Where's my powder at? Where's my powder?
Got the powder, but he's good to go, so we're ready to rock and roll. But welcome.
Right there. So what are we talking about, man?
Talking about a topic that I think is near and dear to both of our hearts, especially me, which is about what it takes to find deals in the market today, right? And it's a mix of, broker relationships. I know we've done a session on that one previously, right, where we talked about how do you talk to brokers, but it's really tying the two together to actually get something done, right? So,
no, I think it's important, folks, right? Especially in today's market. I mean, was it always important? Yes, of course.
It's always important.
But today it's all about relationships, right? And if you don't have the right ones, you're not even going to get in front of some of the deals that we're looking at, right?
Yeah.
So you're going to have to hear from the man, the myth, the legend, Mr. Ferris today.
And true story, literally, and it's funny, one broker, I'm not going to mention any names.
No, we're not going to mention the market.
He's a good friend in a certain market, and we've done, so we hadn't really caught up with him, I'd say, in a couple of, it's been a month and a half. I think I saw him a couple, 2 instances ago.
You saw him in MHC, right?
Well, just today, coincidentally, called me. I couldn't answer. He sent me an email, and I called him back. Brought us a deal. He basically said seller decided they wanted to sell. The seller was waffling. He said kind of initially, and then made see the seller was kind of deciding, does he want to? He's going to do the full market. But he told them today, hey, I want to sell. Give me an offer by Friday. And go to a very small select group is what he said. So came to us, and we're going to look at that very closely, right? It's very different than the deal that gets 10,000 people signing a CA and 300 property tours or whatever nonsense. So
dozens and dozens of offers.
But really, I think that leads to the point that I want to make, which is the most important point. I think to find a good deal is use your broker relationships, right? Really get to know those guys, win their trust, win their confidence, right? And really do what you say you're going to do, because that will lead to them thinking of you, right? Whenever they say,
what do we call it? Be a good buyer.
Be a good buyer, be a good seller. It really goes both ways, right? Even
you don't want to be a pain in the butt, right? Because we've talked about this on the show before, right? It's a numbers and it's a relationship business.
And we'll talk about the numbers here shortly and how many numbers that we're talking about.
But again, it's competitive. There's more people coming into the space each week. There's a ton of money in the market, so you have to be able to leverage those relationships. And again, folks, don't put them up on a pedestal. The brokers, the guys and gals, they're just
normal guys. We were literally Ben and I were yesterday texting with a broker, and we were talking about how well do we know this broker and how much do we joke or not joke, right? You want to get to know these people, make them friends, right? How do you break that professional gap into a friendship gap?
Yeah, you're going to have to break that bond down, right? Because at the end of the day, right, don't look at it as some transactional thing like where you're calling them up, what's the whisper? And then don't ask any questions, don't try to build any rapport. Because everybody's scared, nervous, thinking that the broker is going to somehow see them as some kind of a newbie. And I get that. Everybody was there at some point. But when you start kind of shifting that mindset into, hey, these folks are just regular people just like us. They've got kids. They go on trips. They've got likes and hobbies.
And they have
all
things that make them mad, and other sellers or buyers that make them, things happen. So get to know that and relate with them, right?
Yeah,
so some people Ben will relate to differently than I will, and vice versa. So, leverage your strengths.
What's their background? Where did they graduate school from, right? Yeah. I think that all of those things.
Actually, we had that the other day. We had dinner on last Thursday with the brokers, and the one that from tech was relating to Ben, and, I was making fun of the Aggie one next to me, right? So it's, it's UT, and, but you actually use that as a way to relate, right?
Absolutely do, right? Anything, it's like anything you do, right, in life, right? You want to try to quickly break down that barrier and build rapport with people. It's sales 101. And so don't think for a second, folks, that if you're getting into this business that you're going to be able to do it all behind your laptop. This is a relationship game. You have to build rapport, real rapport, not some fake, I'm trying to get something from them and, I don't want anybody to screw me over, right? If you start building up a real relationship and a friendship with these people, things are going to go a lot farther.
And Ben said real, and I want to add one thing. Is just also figure out how do you add value to them, right? Being an easy buyer is a good one, but I like to call them and just give them more of what's going on, right? What am I seeing? This broker right now, just talking to him, I'm like, what's going on, man? I haven't heard from you. Told him we've been on fire with all these other markets, but in your market, it's been really low volume. He said, yeah, that's what I've been hearing from buyers, right? I told him the only deal we're looking at, share data, share information with them, right? Help them be a better broker, and they'll in turn appreciate that, right? And again, you will be top of mind. So don't be the transactional guy.
All right, so moving along, we got some questions in ahead of the show here, so we're going to kind of go through these. I'm gonna rattle them off to this guy.
And really quick, he'll rattle them off to me. We talked about relationships to help bring the floodgates.
Yes.
But then it's really, and I think these questions are geared more towards what happens after that, right? So now I got all this stuff coming my way.
So keep that in mind, right? It's still a relationship game. So one of the questions is, what is the multifamily market looking like today in terms of deal flow and competition? I think you just talked about it. Some markets are on fire. There's a lot of transactions, and then some aren't. Right?
Yeah, I mean, and it's interesting because, we're in multiple markets, right? Houston is a market that was flat previously. Now it's just on. So you're seeing everybody and anybody trade, every deal trade. I could drive down the highway and point to 30 deals. Yesterday we were driving down the highway, coincidentally with a partner. We're just talking about this deal, that deal. We're best and final. There's a lot going on, right? Atlanta was there 2 years ago.
Yeah.
So all that has traded, and now it's sizzling off a little bit, right? They can only trade so quickly, and it's just different per market. But really, the overall pulse though is, there's a lot of demand for multifamily, right? So there's region-specific things, but as a whole, there's still a tremendous demand, even with interest rates going up. I think both Ben and I's philosophy is, I don't think pricing is going to shift significantly, right?
Yeah.
I think it's going to stay what it is. Multifamily is an attractive asset class. You're getting inflation, which only makes it a safer investment for people to continue to stay in real estate. So it's very hyper-competitive, and that's where you, as a buyer, you have to start to figure out ways to juice the deal and or lower your return expectations.
Or differentiate yourself amongst the pack, right? And trust me, if we're head to head with somebody and the broker knows, likes, and trusts us versus somebody that just came off the street, who do you think they're going to encourage the buyer, or the seller, to do business with, right? So always keep that in mind. So I would mimic what he was saying, right? It's a competitive market. There's a lot of, obviously, people coming in because it is a safe asset. But I say, again, inflation, we talked about this last week, right? Rents are going up. Yes, expenses are going up too, but rents are going up tremendously in some markets, right? And that's going to obviously keep values up. Interest rates, TBD on how that all kind of plays into the equation. But I think with the amount of money that's coming into the business and the amount of demand coming in to buy multifamily, I think it's going to keep values high, right? So, next question. How has your underwriting criteria changed?
I'd
say, let's call it last 6 months.
Yeah, so this one's an interesting one because ultimately, I think there's two parts. There's how aggressive do you get on the deal, right? And then the other side of it is what return profile do you need to get to, right? And so, I think let's talk about the return profile side, right? What we bought 3 years ago and presented to investors 3 years ago is very different than what we're presenting today, right? What was a 16 IRR that we'd shoot for is now a 13 IRR, right? And maybe we're shooting for 18 even before that.
I think it was 17 to 20.
On the IRR, right? Not average. Yeah. And so the market has changed. Return profiles have changed, and therefore, as a buyer, in order to actually get a deal done, you gotta change with it, right? And again, it's all about your investors. I like to say I can buy any deal in the world if my investors are okay with that return profile.
Yes.
Right? If my investors just want a 2% return, they don't care about anything else, I can go buy any deal on the market today.
And there are buyers, folks, that actually don't mind that, right? They look at it as a preservation of wealth. There's a lot of foreign investors that also don't mind that as well. So you have to take that into consideration, right?
Ultimately, we're cash flow buyers in appreciating markets. That's maybe the way I would say we are. So we need to find enough yield to make it attractive. The other thing too that I would add in terms of the underwriting now is about how aggressive do you get, right? For the longest time, it was all about 3% rent escalators, right? But I mean, we had 10% growth last year, right?
We had 10% growth year to date in some markets.
So it's been something to factor in, and we look at deals differently now. I'd say two things. Ultimately, in case the market does shift, we're looking at bigger and newer, better deals in better locations, right? And going into well capitalized, right? So we can ride it out, and it's not a grind of a deal where you're in this weird flux, right? That's as a business as a whole. But the other piece of it, I would say, is looking at deals from the lens of lease trade-outs is really, to me, one of my favorite things to see right now, right? If the previous owner, or the current owner, not previous, the current owner has done 30 leases at $400 more in rent, statistically, I could probably do the next 30, the next 100 at that, right? Or somewhere close to it. And so, this is where you get away from modeling deals at a T12 and start to look at T3, right? And so I think right now, in order to get a deal done,
most lenders are looking at T3s.
Lenders are looking at it that way.
They'll look at income, folks, on a T1 or a T3 basis, and then they look at expenses on a T12. So you really do. He brought up a good point, right? You have to be looking at what's the last 60, 90 days worth of leases. You're actually going to be amazed, at how much rent growth has just happened in the last 90 days alone, right? So just keep that in mind, right? When you're looking to underwrite deals, that's what your competition's doing, right? They're not taking what happened in 2021. That's too far away, right? What is happening now and what is coming up, right? What are some of the leases that they've already booked that maybe people haven't moved in? Yeah. That's what they're underwriting to.
Absolutely.
Right? And I'd also say, again, reversion cap rates, in all cases, you need to say if you're buying at a 4, you should, try to obviously increase it to 15, 20 basis points, depending on how long, per year, depending on how long you're going to hold the asset for. So you still need to do that. But now, right, your starting point is a lot lower.
Yeah.
Right? So you're no longer starting at a 5 or a 6 cap that you're buying it at, or maybe a 7 back in the day, right? Where then you're going to sell it at an 8. It doesn't work like that.
I had a good broker friend tell me, 2 months ago, it was like Austin is now in the 2 caps.
Yeah.
So, market specific. But again, if I'm buying a deal in Austin, I'm not going to start at a 4 and say I got to sell it at a 5. Like, that's just not realistic for Austin.
Yeah.
So, you
have to normalize it for the market itself, right? So, all right, moving along. How many deals on average do we underwrite a week or month before you find a deal that meets our investment criteria?
What I like to tell people is our value add to our partners is we look at more deals than anybody in the country. I will probably say that pretty confidently, right? In
Minus maybe BlackRock or
I'll put it up. The BlackRocks are probably I question. Are they? I know they have their markets. I'm sure that they're probably only looking at a very slice of that market.
Possibly.
We're ABC. We'll do it all.
Yeah, we're opportunistic.
So, we've built an acquisition machine. We are underwriting 40 deals ish a week right now. That's significant, right?
Yep.
We're probably done 20 best and finals the past 30 days.
Yep.
We keep losing, right? You don't want to be a bridesmaid, people. You want to be the bride. We keep on becoming bridesmaids. Second place is not a fun spot to be in.
Second place is
our heart has been broken many times. But that's fine. That's the name of the game, right? We are looking at a lot of deals, getting close, and buying the deal that fits our box, right? Yes, we could step up and win any of them if we wanted to, but it's about buying the right deal. We have good partners, good track record, and that's our value add. It's hey, we can be patient, buy the right deal, but make sure we look at more deals than anybody else and build the machine to support that. So
boom, love it.
Right now with hot market, 40 is the number ish, 30, 40.
Yeah, I mean, and that's really been kind of our goal this whole year, right? Is to see because it's really a numbers game, folks. Really, you have to see so many deals in order to find and buy one. Right now, it's probably, I would call it 150 to 200 deals to actually get one under contract that's going to fit your investment criteria. Now that's depending on how aggressive you are, what market you're in, but the markets that we're in, which are kind of high growth, Texas, Georgia, Florida, even Tennessee and Ohio to a lesser extent, those are high growth markets. There's a lot of competition. So you got to look at a lot of deals, right? Whereas I like to pick on Topeka, Kansas. Maybe there's not as many.
Well, it's funny. We have a question that came in from not Topeka, but I'll tell you a different market, but it reminded me of the Topeka.
All right. So I always pick on Topeka, Kansas. Not that I don't like Topeka, and if you're from there, I apologize, right? But there's just not going to be as much competition, right? So maybe you don't need to look as many deals. Maybe you only need to look at 50 or 100 in those markets, right? I don't even know if they even have that many there, but
sure they do.
You can kind of get my point, right? Yeah. So, all right, moving along.
But really quick, if you guys have questions, there's definitely a lot coming through, so please ask them. We will answer them live here. I know it's a topic a lot of people are interested in, so definitely put your questions in because we'll go first come, first serve. So,
all right, we're going to move fast because I like to do the Q&A part. So how to know when to step up in price or when to back off?
Yeah, so this is a hard one.
This is hard,
right? We kind of, I think the deal to step up on today is the deal that's in a better location.
Yes.
Got more, newer deal, better location, right? I'd rather step up and offer a lower return than do the opposite, which is take the deep value add deal and step up on that one to try to get a lower return. It's like, well, if I'm going to land at a lower return, because that's what stepping up does, right? You end up getting less because you paid more. Well, I'd rather do it on a much better deal that's going to be easier as an operator.
And safer, right? You know what I mean? It's always safer to buy a newer asset. You have less maintenance issues.
Less things that can go wrong, right? And yes, you can have a newer deal that becomes risky for various reasons, but it's to Ben's point. It's the general statement. It's always safer for me to, walk across the street than to walk across the ice. It's my analogy I just thought of on the fly. But, I could walk across the ice and not slip and walk across the street and slip. It could happen, but, try to make your life easier, people.
All right, we'll go with that one.
Analogies are a little off.
I think the point and something to think about is risk-adjusted returns, right? We talked about this in the past. I'm not going to get into that. Right?
Risk-adjusted returns. I just thought of that acronym.
Right? All right,
no laughing back there, Shanna.
Good. All right. She's like, what the heck are you talking about?
Yeah, RAR.
And I had to figure out too.
Yeah. Risk-adjusted returns. A lot of people ignore that, right? People only look at the bottom line, and we know the people that do A, B, and C deals, and they're presenting the same exact IRR on every one of them. But naive investor says, okay. But I mean, really, you have to look at what is the risk that has to happen. If I have a C deep value add that Ben's got to go get 100 bids and 20 GCs and all this stuff needs to happen to get it to work. versus the deal that's kind of humming. I mean, there's more risk that, a GC steals from you, a GC doesn't show up, he's late, whatever. All this stuff can go wrong, right? And risk-adjusted returns is a huge thing that, unfortunately, I like to say, I think most investors don't truly understand risk-adjusted returns.
No, they absolutely don't, right? And that's why I encourage you guys to do some research on that term, right? And we're going to throw that out there because it does make a difference. And I think he brought up a good point, right? That deep value add, that 17% IRR, or that Class A in the best part of town that's 15% IRR. Some people are naively going to go for the 17% IRR, but what they're not baking into their decision-making process is that 2% delta is huge on that, because it can go completely backwards, and that 17% could be 7, right? And really that 15 was pretty safe and pretty consistent, and you could have gotten that without a lot of headache.
Yep.
So take that into consideration, right? So I want to get to the Q&A.
And that's
so
where
we're
actually
one more.
And not sidebar, but that's where the pref equity fund that we launched is pretty cool.
Yeah.
Right? It's risk-adjusted returns. Yeah, you're getting a 10%, but you're getting it very fixed, sitting in front of a tremendous amount of equity. And so it's really hard to not perform. And so that's where I like to tell people, like, yes, it's 10%, but I mean, it's almost like a loan. Right? And so risk-adjusted return, and that's where we talk about it often, that it's really a different investor that would invest in that understands the risk-adjusted part versus the guy that just wants max dollar.
Absolutely. Roar. All right. What incentives do you offer to sellers to make your offer more attractive? Well, now don't give away our secret sauce now, man.
Yeah,
right?
I mean, we basically give them each a free dinner with Ben and I to catch up with, hang out with. No,
it's worth millions.
It's worth millions.
Worth millions.
We give them the option if they want hard money or if they want the dinner. Unfortunately, people tend to gravitate towards the hard money, and I don't understand why.
I don't know why.
But
it's crazy.
It's a competitive market out there, folks. So right now, what does the deal look like? There's any market we're in, there's hard money. Like even
and it used to not be like that.
Yeah,
they used to be like, at least in some of, like I remember Atlanta, we didn't have hard money on the first few deals that we bought out there.
I believe it. It's crazy to think about.
Now Atlanta's all about hard money.
Whereas right now, the past 3 deals we've done have been like million hard. Like just kind of, it depends on the deal size. People, you want to be at that 1-2%.
Yeah.
Hard though is really, up and down. We're looking at all sorts of market, and they're all some more competitive than others, right?
Yep.
But it's really hard right now to compete if you're not doing hard money, right? And that's where get into a deal that you're comfortable with. So going back to what we said earlier, newer deal, better location, typically means that there's less things that can go wrong for your hard money to explode.
Yeah.
So we won't go hard. We won't go super hard. We'll go hard, but not extremely hard on like a CD value add.
And just for people that are listening in and don't know what any of this terminology means, hard is non-refundable earnest money. So that means that unless there's a title problem or there's some kind of an environmental problem, regardless, once you say, hey, maybe it's hard the first day of the PSA, that means you're never getting your money back. You either close the transaction.
It's a bet you're making to prove that you're going to get it done.
So there is a fair amount of risk. So I always tell people, be very, very careful, right? And feel comfortable that, hey, I have done my due diligence, I've done my underwriting, I feel good, I can close this transaction, right? Obviously, we're transactional, we do a lot of transactions, we know things that are going to get done and stuff that's not, and what's risky and what's not, right? And we're gonna price our hard money accordingly, right? There's certain deals, Class C deals, I'm not going to do $1 million hard on a Class C deal.
Yeah, we're doing like 999,000. So kind of
really.
But to Ben's point, it's all about risk adjusted for us, I guess the inverse, right? So we will taper down the hard money for deals that we like, man, there's a lot of skeletons in this deal, and I don't know how many more skeletons we're going to find.
We don't know, right? And so you got to be careful, right? And I just say across the board, right? Yes, price is king. I would say 90% of the time it's always price driven, right? But we've won deals on terms too.
Yeah.
So
the other big one
terms.
is DD. That's the other big one. And again, not everybody can do. We have our own management company. We can do short DDs.
Yep.
We could do. Don't tell the buyers this, or the sellers this, but we could do a 7-day DD if we really needed to.
No, absolutely. Right? And we would on it, maybe even a Class A deal, right?
So it's about
you're out there for 2 days, folks, right? You don't need a lot of build-in buffer time, and really people are doing that because they're trying to get their ducks in a row. We've already done that ahead of time, right? We've already lined up debt. We have an insurance company. We know where our finance is going to be. We know we can raise all the money. So there's a lot less risk for us to do that. Whereas you have somebody that's coming in fresh, maybe hasn't done a lot of transactions, they need that 30 days just to try to get their ducks in a row, right? And that's not us in our case.
And then the last thing I'll add too, in terms of terms, because we lost a deal, I'm still a little heartbroken about this, recently, but really time to close, right? As a group, we probably would have won the deal, but they were a lot more aggressive in the time to close, and for us, it's nervous to trust a lender because we can't buy the deals cash. Some groups can, right?
Yeah.
lenders, it's hard to, for them to move very, very, very fast. And so we can only go as fast as the lender. So that was a bet that we would not take from a risk-adjusted perspective. And, cost us a deal. But hey, the other group won because of that. So something to think about.
It is what it is. Theirs was, we probably couldn't have performed with the timeline that they had. So, tell
Ben to go to Uncle Suttles and tell him to bankroll us, but Uncle Suttles won't show up. So.
Yeah, that mythical guy. Yeah. Why didn't he bankroll us more? But anyway, I want to get to the open Q&A. It sounds like we got a couple coming in.
So let's see. So
it's weird. You don't have your laptop, man.
I know. Laptop battery was dead, so I was not on my A game. It's been a busy day. We have kind of a couple of new hires and kind of continue to grow the company, but spending time with them. So let's see. So Amanda says, I think she got her audio resolved. We have Roscoe says, I'm RC from Thonotosasa, which reminded me of Topeka, Florida. Ready to learn and put in the work to own my first duplex, triplex in Houston.
All right,
welcome.
Man.
You're in a good spot. And if it sounds like you're based in Florida, but next time you're in Houston, come on by. Try to time it. We have a meetup that we do first Thursday of every month.
Yep.
Definitely probably a great time to come out here so you can check out your duplex, triplex, and come, meet us and whatnot. So let's see. Lay reply. Next question. Bargov asks, what do you think of the Tampa market?
Love the Tampa market. We love Florida.
Love it. We was out there end of January, right?
Yeah. Before NMHC.
Great market. We really like it. Yeah. We try to buy. It's just hot. It's definitely competitive.
So hot.
And we're the goal is to get a Tampa deal by the end of the year. So we're doing a Florida deal, but we need to get now Tampa and Orlando. So
you hear that, David Hudgens? Yeah. We got you, buddy. We got you.
So we're gonna get a Tampa deal going here, and and again we're looking up and down ABC. So if anyone has a good Tampa deal, please let us know. But as a market as a whole, we like what's going on there, right? We invest in markets with job growth, population growth, and landlord friendly, and Tampa checks those boxes. So
and we will co-GP on the right deal.
Yeah.
Right?
People have deals anywhere. Reach out to us.
So and we do have a pref equity fund too. So
Ben needs more emails. Please email Ben, and he'll kind of get them going. So.
Any more?
I think that's it. So people have more comments, questions, ask them. Otherwise, I can keep going.
All right. We're going to give it one more second.
All right.
Because they sometimes trickle in. But I'm going to talk about a mission that I'm on, right? To serve those who served us, right? So the Veterans Community Project aims to provide housing and walk-in support services to homeless veterans, right? So help me raise $30,000. So looking to raise 15, I'm going to match it dollar for dollar up to 15K. And I want you to check this website out because this is a great cause, right? Again, folks, this is a pandemic that really, I know we throw that word around loosely the last 2 years, but there is a lot of homeless veteran folks, and it's really something that we need to highlight and really try to take care of these folks. And so this organization is building tiny homes for these veterans, right? Yeah. And I think that's an incredible cause, and I'm looking to...
One of our friends, Eric, runs that.
Eric Upchurch, he's my buddy.
And just so Eric knows, Ben's schedule freed up around that time, so maybe we can drag him back to that hike.
No, but there's about 12 other folks that are going to be doing a hike, 170 miles around Lake Tahoe. So do check out Eric Upchurch's, Facebook page. He's got a lot of posts about it. But I'm here to raise the money and help them with that cause. So check it out at bit.ly/donate to homes for the brave.
Check out the slide on the screen.
So. Yep. So check that.
In the caption.
Love this organization, and hopefully you can contribute, even if it's $5 or $10. We'd love to have whatever you can take. Right? So, moving along, what are we doing? Oh my gosh, this is the meetup that
multifamily investor horror stories. So,
oh my God,
topic Ben and I could talk about for weeks upon end, and hopefully not anymore. All old stories. Hopefully, we don't have any more new stories.
Man, Martin's going to be out there. Yeah, Martin's going to have all kinds of war stories. Wow.
So basically, we're putting on a panel, right? For those that know, we have this meetup we do in Houston. We've been doing it for several years. First Thursday of every month, right? Great time to come to Houston if you're from out of state. And we decided to put on a panel of some of our friends, right, to talk about multifamily horror stories, right? Yeah. What's gone wrong in deals and how did they resolve it, and ultimately what's the outcome? So we have a panel of 4 people. We have our friend Martin Bronstein, Cody Lawlin, Michael Lee, and Kyle Jones are all going to be out there. So if you're in Houston, definitely a good time to go check it out. Yep. Go learn just kind of what goes on behind the scenes, right? Everybody really fixates on what's happening in the front, but everybody doesn't really notice all the sausage making behind the scenes. It's always fun to eat the sausage, not make the sausage.
It can be devastating too, right? So I think this is a great kind of, yes, there's a lot of sunshine and roses and unit counts and money raised and deals closed, right? But again, where the rubber meets the road is the operational piece. And I'm sure this is what these guys are going to talk about. They could be talking about the closing process too, which we've talked about. We've had lender horror stories and everything else in between. So check that out at www.disruptequity.com/meetup. Please register there. That's going to be April 7th. at 7 p.m.
Next
Pitch
Thursday.
25 Beer Park. So good food, good booze. So, well, it wouldn't be a Money Monday without us talking about MFIN conference, dude.
A big conference is coming on up. So we had the big one about a month ago, actually 45 days ago.
Man, it was already 45 days
45
ago?
days ago.
Jeez.
And, 600 people, 200 people wait list, and we're excited to do the next one. So, if you're interested in checking it out, we're going to nail down the date here very, very soon. It's coming up. It's going to be probably mid-July, and it's going to be probably in a city that rhymes with Beatle. And so, check out mfinvestornetwork.com if you're interested. Would love to see you guys there. It'll be a fun time to come hang out.
I heard that was a good time of the year to be in Beatle.
It's a great time of the year to be in Beatle.
Yeah,
and so definitely, and to actually Ben's point, that's the reason we want to do it there, right? Yeah. We try to do awesome places that time of the year to be in. Houston's a lot better in February than it is in July, so I figured we'd hop over there and please go out there and spend some time in the city. Get to enjoy it. Don't have the conference bring you there. It's a business write-off, but stay and enjoy the city. So
absolutely. So check it out, mfinvestornetwork.com. Put in early bird as your coupon code. Get $150 off all the way until April 7th. We don't make any money at this price. I don't know. Shanna just continues to give these tickets away, but we're going to be really, really excited to see you out there. We're going to have some great panels, some great speakers. Really, really excited to be out in Beatle. So,
perfect.
Boom. What are we talking about next week? Oh my gosh.
We're talking about a real estate investing journey from 0 to 3,000 units.
Oh my gosh. And it was a rocky journey at some points, man. It's up and down.
Ups and downs.
But we're excited to talk about that.
Sailboat sails down the ocean in waves, not in flat glass.
Man, he's just big on these analogies today. All right, so check it out
next
week.
That one up
too. Money Mondays, every Monday at 3:30-ish. Check it out. Look forward to seeing you then.
Well, thank you, guys.